friends. We are breaking down real estate and mortgage lending without the stress. So if you are buying, selling, or just curious about the market, you are in the right place. I'm Bekki Piper, your Northeast Florida Realtor. With me as always,
I'm Diana Bunn with First Coast Mortgage.
So let's dive in with some questions. This topic isn't glamorous, but it's powerful. Let's talk credit scores.
I love talking credit.
What actually hurts your credit the most when you're trying to buy?
A lot of times, credit is affected by your utilization ratio. So a lot of borrowers, even if you have just like a $500 limit on a credit card, if you have that credit card maxed out, it impacts your credit score negatively. Utilization is being really mindful of how much you owe versus how much you're allowed to borrow. It's really important that you keep those limits down. At least 50% of the actual limit is where your balance should be, and that'll hopefully deem you like the best credit score for that trade line.
Okay. And that's a good transition to our next question, which is, should buyers pay off debt or keep cash on hand?
It depends. That's one reason why we recommend that you get pre-approved first, because there's a lot of things as a lender and someone that's been experienced doing this for over 20 years. There's little things that we can do to tweak credit. So sometimes it's not just about getting a minimum credit score, but sometimes it's just about edging your credit score up just a little bit to get a better interest rate. Get pre-approved and talk to a mortgage expert so that you can understand whether or not you have to pay off debt, or is it better for you to keep cash on hand.
Okay. And how fast do you think someone can realistically improve their credit score?
It depends on how long they've been damaging their credit score. A lot of times lenders have access to what's called a rapid rescore. So, for example, I have a customer that had to pay down her credit card just yesterday, and it was only like $50. She paid it down. But we are able to rescore her credit in 2 days, and now we have a higher credit score, and it gets her in a better loan program and a better interest rate. So you can do it really quick, but if you've been doing not so good on your credit, sometimes it could take 6 to 12 months.
Oh, wow. Okay. Does opening or closing accounts right before buying matter?
Another portion of how your credit score is derived is on the length of accounts. The longer the account is open, the better that it weighs into the algorithm that creates your credit score. So don't roll open up any new debts while you're about to buy a house. Let us look at it and see so that we can recommend the best thing for your credit.
Great. And what is one credit move you wish your buyers would stop making immediately?
Closing revolving trade lines. So a lot of borrowers think that they need to just close everything and they shouldn't have anything open so that they can buy a house. And that's really actually can hurt them. Yeah. You really need revolving trade lines because it makes up about 30% of your credit score. So it's really important that you don't close anything and don't open anything, and talk to the experts.
Yes. Wait until Diana tells you what you can and cannot do.
Yes.
Yes. All right. So if you are thinking, okay, now what? That's where we come in. Send us a message. Let us talk you through it. I'm Bekki Piper, your Northeast Florida Realtor.
And I'm Diana Bunn with First Coast Mortgage.
All right. Our contact information is in the description below.
Give us a call.
Thank you.
Bye.